So, hey Brad, thank you for hey Brad, nice talking to you again. Maybe let's start here. Let's start by me apologizing on the record for delaying this talk for a week because I had forgotten my laptop charger, but it gave me an extra week to think about this conversation and actually look forward to it. So thank you for making the time.
Yeah, happy to be here. Thanks for having me.
I guess that not too many people know you by your username, so let's just sorry, by your real name, or less people on ETH Finance, where you made an original post a few weeks ago, know you. But you made a post titled "The Seat is Occupied," and I will ask you, or I'd like to ask you to read it first for people who are listening who have not read the post or who don't remember it. Could you read it, and then I would like to have a conversation with you about that post, and if anything at all changed in the last 25 days since you wrote it, and let's just go from there.
Yeah, sounds good. I've made a couple changes just so it's a little bit more readable than or listenable than readable. So titled "The Seat is Occupied." I've been in the Ethereum community since the very beginning. Hell, since before there even was a community, pre-sale. I was around for the rise and fall of Mt. Gox, Bitcoinica, Havelock Investments, BTCT, Trenton Shavers, and the origination of the term HODL. I quit a lucrative job in late 2013 to work at a Bitcoin startup, and in 2015, I made a personal transition from Bitcoin to Ethereum and have been here since. I'm as much of a true believer as you're likely to find. I'm writing this to share my view on where I see this space going and why, like the title alludes, I refuse to give up my seat on this rocket. After my quote light bulb moment with the blockchain, I had a simple thesis. Given what I saw as the foundations of the technology, it seemed likely that this experiment was going to have a binary outcome. Either it was foundational, earth-shaking tech worth untold sums, or it was mostly nonsense, and I resolved to seeing one of those two ends. I think the curious child in me wanted to see what happened when the ignition button was pushed, whether that resulted in a detonation on the launch pad or a liftoff into orbit. Whatever was going to happen, I'd be there. So that's what I've done and will continue to do. That's not to say I haven't taken profits. I have, but mostly to salvage some semblance of responsibility as I saw the portion of my net worth held in magic internet money grow, not because I lost confidence in the technology or its potential. Broadly speaking, though, I don't believe we're close to seeing the complete fallout from pushing that button. The reaction is still in progress and will take years to complete. As I've watched this industry grow and contract, it remains clear that the genie is not going back in the bottle. Crypto truly is a brain virus. Once educated, people understand the value of a scarce, programmable, permissionless, non-sovereign asset, and I submit that society won't stop seeing value in this. Now, I believe there's ample evidence to suggest that speculative markets move in cycles. And having been through the peaks and valleys of previous crypto cycles, I am confident we're in a valley. I'm also confident there will be a future peak. The market is utterly manic, for better or worse. So I see that a 2017 Ethereum, when app and protocol composability was pure theory, there were no DeFi products whatsoever, enterprise interest was cursory, and the largest, most public demonstration of the tech was collectible digital cats. All that had people tripping over themselves, trying to buy at prices almost 10 times higher than they are today. I can't help but think, if those 2017 fundamentals provided enough of a platform to support the speculative rise we saw to peak prices, what will it look like when the price gets out ahead of current fundamentals, where we're in the midst of a Cambrian explosion of composable apps and protocols, a serious and growing portion of total supply locked in DeFi products, proof of stake right around the corner, poised to gobble up even more supply, more money Legos, more developers, more mindshare. We are in an entirely different realm where fundamentals are concerned. So crypto peaked in late 2017, early 2018 at shy of $1 trillion. If you don't think the story so far points to crypto being a multi-trillion-dollar asset class in the future, I'm not sure what story you've been reading. In comparison, the dot-com bubble brought peak inflation-adjusted valuations to between $6 and $7 trillion. This all in a siloed market where the primary participants were those with access to US equities and early stage investment opportunities. Crypto is global. It's unrestricted and has no minimums. And it has multiple narratives, which are ultimately additive, that all command their own monetary premium. The store of value aspect is independent from the need to pay for smart contract execution, yet both work in concert, driving demand. Unless the genie does retreat back into the bottle, I believe we will see prices move out in front of fundamentals yet again, just like in 2011, 2013, and 2017. Thoughtful people are understandably reluctant to throw in with what seem like pipe dream valuations. They sound too good to be true, naive even. And I'll be the first to admit, talking about returns using an X instead of a percent should always be met with skepticism. But there are two factors at play which I feel are underappreciated that can and will legitimately drive returns of those magnitudes. And those are liquidity and reflexivity. In comparison to other financial markets, crypto markets are extremely illiquid. Not necessarily for retail investors who can move a few $100,000 around with minimal price slippage, but for the sovereign wealth funds, endowments, pension funds, aka the institutional money, it's a different story. A lot of people talk about how crypto will only rise once institutional money arrives. The reality is that crypto needs to grow in order for institutional money to arrive. This transition from illiquid to liquid is a one-way street and will continue to be responsible for profound price moves, as illiquidity is the primary reason crypto prices move as intensely as they do. Sellers are always trying to get the most value for their assets, so if you want asset X right this minute, you're going to pay out the nose for it if there isn't sufficient supply when you want it. And having that short time preference leads me to reflexivity, which is especially pronounced in this industry because the two driving components, sentiment and trading based on that sentiment, now both move instantaneously. So once sentiment changes, which will inevitably happen if you believe in market cycles, the air will get sucked out of the room at a blistering pace. This is where fear of missing out really ramps up, and it grips everyone from fund managers to middle schoolers, global fund managers and global middle schoolers. The result is light speed FOMO mixed with light speed trading of an illiquid underlying asset, aka the perfect recipe for face melting price moves. So long story short, I think crypto is a gift to this generation. Do with this gift what you will, but when the music stops and the sentiment shifts, I hope you found your seat, because they'll go in a hurry.
There is so much to cover here.
But
yeah. I'm afraid that people will listen to this and say like, why don't you cover this? Or why didn't you talk about that? So let me start with an easy question. Mm-hmm. What actually made you write this post? Like what was the moment that you decided to write this?
You know, the bear market for the past 18 months or more, you know, really was getting people down. And I totally get it, especially for people who entered the space sometime during the bull market, say like in the second half of 2017. I'm sure they've had like repeated introductions to the tech and seen the price go up and down. Usually this isn't, people's first intro to crypto. They don't just go out and buy some generally. So I saw like deviations from what I saw as fundamental developments in the space. I saw deviations between that and where price and market movements were going. And I figured, I've been in this space for quite a while, longer than most. And even though I'm watching, an 85% drawdown over 2018, um, when I look at the things that are actually happening in the ecosystem, actual on-chain metrics, actual adoption, publicly, forward adoption by enterprises, um, I saw two totally different stories, divergent stories, price going down and fundamentals and all the stuff that, kind of matters just going up and to the right. So I felt, a need to try and highlight that as best I could.
Yeah, we actually had a chance to chat a little bit last week, so let's just maybe start there so people have a better understanding of your perspective on the space. You're actually a mechanical engineer by
Yeah.
education, and I like for you to retell the story you told me last week about how you actually got from mechanical engineering into the crypto community, sorry, the cryptocurrency sphere, and then the cryptocurrency community.
Yeah. Yeah. So my education's in mechanical engineering, and I had been working in a technical role in a number of different industries. I worked in Formula One for a little while. I worked in aerospace, medical device company, and in I think it was late 2012 or so. A friend of mine who I went to school with, who was a mathematics guy, um, introduced Bitcoin to me. He said, "Hey, I think this is pretty interesting. Let me know what you think." And I have like the most common background story of people in this space of hearing about it the first time, totally rejecting it, thinking it's a scam, being super skeptical. Um, and over the next coming months, him and I would talk a little bit more, and he was still like, "Hey, I think there's something here. Yeah, it's kind of crazy." So I decided to read the white paper, the Bitcoin white paper, and dive in and try and figure out why I didn't think that this would work. And in doing so, I discovered just how elegant of a solution the blockchain presents. And at that point, I couldn't think about anything else. Like my performance at work started to decrease because I was just spending every moment like steeped in this stuff, reading as much as I could. Um, and so it got to a point where I was working in a corporate job, and I don't know, was sort of disillusioned, I guess, with the prospect of working this type of role for the next 40 years or whatever it would be. And I thought, I'm young, like this tech seems to have so much promise, and the implications of it are like so hard to overstate. Um, that I decided I need to do something in this space. So I left that job, and I started a Bitcoin startup that was kind of focused on doing financial services for the poor, specifically the remittance sector. So what we wanted to do was enable. I think we were one of the first people to prove out the ability of doing custodial in a custodial way, Bitcoin transactions over text messaging. So we really wanted to try and capitalize on inefficiencies in remittance markets and things like that. And this was before the regulations surrounding all this stuff were clear by any means. So we were shooting from the hip a little bit, and just ended up having a number of issues, legal issues. Working with lawyers, and they're like, we don't really know whether this is kosher or not to be doing. Penalties if you're moving money for people on, say, like the OFAC list or something like that. Like penalties are really harsh. So we ended up, running out of money. And since then, I kind of went back into like a consulting role, more on the management consulting side. But then, my love for the space never subsided, and I just started focusing all my time into research. And that's pretty much what I've been doing full time for the last 3 years or so.
You mentioned that that friend introduced you to Bitcoin, but you also said it was quite elegant solution that it proposed. But was that from a mathematical or from a mathematician's point of view or a sociologist's point of view? Because you went on to do this startup or try and get the startup off the ground where you would help people, which is not as much a technological or mathematical solution, but it's a sociological. Well, it's not. It's a sociological problem that you're trying to solve. So, what was the angle there?
It was definitely the sociological side, by far. As much as I have a technical background, it's a different discipline of technical. So, for all intents and purposes, I'm non-technical in the crypto space. I have no real background in software. But what I saw was the elegance was of, in removing middlemen, unnecessary middlemen. I don't think that all middlemen should be painted with this broad brush of all being bad. But yeah, it was looking at the misgivings that the financial sector had given society through, the 2008 crash, and looking at the increasing presence of tech companies in the lives of everyday people, and in pursuing the startup, really getting more information and learning about how siloed off what we would consider, we being people in developed countries, Westerners, whatever, what we consider to be modern financial services or modern financial tools, the portion of the population, global population, that has access to that is growing, but is still surprisingly small. I mean, especially if you consider having access to multiple things like checking accounts, investment opportunities, savings accounts, all these different products that we can get at the drop of a hat. And I just felt that the underbanked, or however you want to label people that don't have access to modern financial tools, I didn't see them getting this access through traditional financial companies. Sort of like how, if you look at places in Africa or Central Asia, they in the phone or the telephony industry, they didn't have landlines, right? They went from having no means of communication to leapfrogging to mobile. And I saw crypto as being an underpinning for enabling people who just had internet access to now, be part of this global financial market. So it was always the societal level aspects of this tech that I thought were the most intriguing. The tech is killer too. I mean, don't get me wrong. I think that is its own version of unbelievable. But when I think about it in the context of providing access, expanding access, it is what really caught my attention.
Now, you said you were working as an independent researcher, and I want to come back to that, but you did write the post, I guess, for investors primarily, because in your post, you, at least as I read it, and it just starts with the place where you wrote it in the Ethereum subreddit, in the ETH Finance subreddit. You did write it for investors. So can you explain a little bit why that is the case? Why you decide to focus on that?
Yeah, I think.
And just let me for anyone listening who's like, oh man, you should ask this, you should ask that. There's just so much to cover. I'm just trying to ask the questions that, or things that might not be as clear as they are written in the post, like your background. It's just I don't really know where to start, so I'm really interested in these side stories, kind of to get the whole picture or a better picture.
Yeah. Crypto is one of those things that is so interdisciplinary that as you start to uncover more, you start to see how many different industries or disciplines that that it touches. Right? It touches tech, it touches finance, it touches game theory, it touches incentive mechanisms, all this stuff, and for a long time, and especially so in the Ethereum community, for a long time, price was sort of a taboo topic. It was never taboo for Bitcoin. Bitcoin always had this narrative around price mattering, and I think that has started to expand into the Ethereum ecosystem, where there's now starting to get a clearer picture that for Ethereum to grow and to continue to deliver on its promise, it has to have a monetary aspect to it. I've heard it put, I don't remember who it was, if it was Ryan Sean Adams or Spencer Noon or one of those guys, talking about how Ether having value essentially enables a wider bandwidth for Ethereum, the protocol, right? As you have more ability to, as you have more money held in the ecosystem, you have better ability to offer the products that are being built, like in the decentralized finance movement.
Yeah, I think it might have even been David Hoffman, because I'm not sure, but the thing I've read quite a few articles the last couple of weeks, and I remember one stated that, to give the example of DAI or MakerDAO, it's great that people can use DAI, but we'll need more DAI, or DAI will have to have much deeper liquidity, there has to be a bigger size of DAI compared to Ether, and the price will have to go up for that to happen. You can't have 1 billion DAI with current Ether levels or current Ether price levels. It was something like that.
That's exactly right. So as in the early days of Ethereum's community, right, we had essentially two primary subreddits, r/Ethereum and ETH Trader. And I thought that early on it was really good that the Ethereum moderators had kind of not allowed price discussion in the Ethereum subreddit, and always pointed to the ETH Trader subreddit for that. I think that had some benefits for sure early on, in the sense that it allowed just more focus on building out the tech, which totally needs to be done, and doesn't get deviated too much by price discussion, because the price discussion can be a little substanceless to some extent. A lot of hopium going around, and that's all fine and well. But I think that now that it seems like even core people on working on the protocols and at a tech level are starting to agree that Ether having a higher value is better for Ethereum than Ether having a lower value. Yes, certain things can work still, but the promise of it as a sort of platform for platforms is better if it's worth more.
It reminds me of that flywheel concept from Tim. I can't remember his name, but the flywheel, the thing that I had in mind was, because this is the bridge you're making between this is where you align an investor with somebody primarily worried about money and his portfolio, where you align them with somebody with a sociological implication, where you say, look, if the Ethereum ecosystem as a total valuation or market capitalization goes up, you actually increase the probability of adoption, you increase, for example, DAI being generated and costs going down and lower transaction costs and faster transactions and whatnot. And this is kind of in a flywheel. You could have those two. You could have those two reinforce each other. Like Ethereum as a from a market capitalization point goes up, which means that there's more and more infrastructure and prices go down, transaction costs go down and whatnot. I just had that in mind. I don't know if that makes sense.
No, I 1000% agree with that. And big shout out to the guys in the crypto Twitter sphere who are pushing the ETH is money narrative. I think there's a lot of truth to it, and I hope that continues to pick up steam as a narrative.
Yeah, I think one of the major things that occurred or that came up during last months or maybe during this bear market is the whole ETH is money narrative. Then there's the whole DeFi narrative, and then there's the Ethereum as money Lego or Lego blocks. I don't know how they actually refer to it, but I really like those three things.
Oh yeah, that the composability aspect, and I know that like not everybody knows kind of what that means, but yeah, that there are, given that all this stuff is open source, it's all freely available, it's all permissionless. People can pick contracts, like specific contracts themselves that other people have written, had audited, and all this stuff, and just grab that and use it, and combine them in sort of an infinite number of ways. And is more and more of these contracts that enable just different little bits of functionality. This can do X, just real simply, real elegantly. You can have, some developer from some far-flung place grab these open contracts and build something novel. And I think that dynamic was really prevalent in the early days of the internet, and helped the internet turn into what it is today. If you needed some sort of license or some sort of okay to push content to the internet, it would have never gotten to the scale that it is. So I see it as, and especially Ethereum, but crypto broadly, is doing that same type of blowing the gates open on finance and financial services. And I think that the implications of that, like I said earlier, are just hard to overstate. It's profound.
There was, and then I'm getting back to your post, but there was one post by Amin Soleimani. He made a post on Compound, and I think the title was something, things to think about before you put $500,000 or $500,000 and DAI into Compound, or something like that. Yeah. And whether he's right or wrong on the technical level, because I myself cannot go and read the smart contracts. They don't make too much sense to me. But what I really liked about the whole saga on Reddit and on Twitter is that it actually initiates a conversation. He literally has 500,000 reasons to make sure that his money is safe in the Compound protocol or in the smart contracts. And actually, again, that is, I don't know if that's part of a flywheel, but there's so much skin in the game from an investment perspective that you can actually push the quality of the of the ecosystem forward, because people have a reason to Amin has a reason to really look into the Compound protocol. Yes. Before putting his money there, which in the end, whatever happens with Compound or companies or protocols that come after it, it just improves the situation. It just makes for better solutions, and in the end, everybody can profit from that. So that's just another thing that came to mind, which I really enjoy about this.
Yeah, I totally agree, and I love that there aren't there's not a shortage of people interested in finding flaws with this stuff. And given that so much of given that the nature of all this stuff is open, and that most of the conversations are happening on channels like Twitter and Telegram and Reddit, I think that people calling out stuff, say, oh, this isn't actually decentralized, or this could be more decentralized, and like just shining light on every angle of these contracts and all the things that are being built. It has such a good long-term impact. Yes, it might mean that project A fails in the short term, and it was a big star child or something. But that's okay. I think that lessons learned, just like I remember sitting through the DAO hack, and the amount of people calling for Ethereum's death at that point was there was a lot. But and yeah, it was bad, and we had a fork as a result of it. But ultimately, I think it really drove a mindfulness to how developers are writing contracts, right? Make this as simple as possible. Make this as easy to read, as easy to audit, and only having things that only having the truly trustless parts of your application existing on a blockchain can help. So yeah, I agree with you.
I'll assume this is in part because my last guest was Dan Conway, and he actually wrote a book about how he did well during the last peak. So I'll assume you did well, and or you had some luck, or whatever you want to call it. And now you've been focusing on the independent research, and I want to get a little bit more and delve a little bit deeper. What is it exactly that you're researching? How do you think about your research? Are you trying to communicate Ether to other people? Is that part of it? Is it more a technical research? Are you a mechanical engineer trying to research? What is your angle towards this space when you say that you're an independent researcher?
Yeah, so I mostly try to focus on it from the financial side, because, like I said earlier, not having a software background like you, I can't read smart contracts. But
Wait, you mean financial inclusion or investment?
well, investment.
Okay.
Yeah,
Okay.
more on the investment front. And so, I'm kind of in the early stages of starting a firm that will either be like an asset management firm or a fund or something like that. So most of my research is focused on kind of three elements. One is like kind of qualitative measures around the ecosystem, like what narratives are taking hold, how are people thinking about Bitcoin, about Ether, about everything else. The quantitative stuff, this is also kind of new for me a little bit, in the technical analysis side, trying to quantify where I see movement going, what trends I see happening, and then also like monitoring for events in the space. So forks, halvenings, things like that. But ultimately what I'm trying to focus towards is trying to find the opportunities within crypto broadly that kind of represent the best option for risk-adjusted returns.
All right, let me just see. I have the post in front of me, and I thought of just diving in somewhere, but it's hard for me to pick out one part. So let's talk a little bit more about the reflexivity part, because that was actually a new thing. I think that for most people, or I'm talking about myself, but that I guess liquidity and the things you wrote are relatively clear. But can we talk a little bit more about reflexivity and what that means in this context? And also, I noticed that you edited it out in the audio version, but in your post you refer to this cartoon where I'm pretty sure if people open it, they'll have seen it before. But I'll just give you the word and just
Yeah. So the cartoon from the post, I wasn't really sure how to go about, describing it, but I can do that now. It's a pretty famous financial cartoon where you have this. Actually, let me bring it up because I don't remember exactly what they say in it. So you have this kind of phenomenon that happens where, let me get there real quick. Sorry. Okay. Yeah. It's sort of a throwback to how stock trading was done on the floor, where you have this guy on the phone and he says, "I've got a stock here that could really excel," and someone next to him only hears "really excel," and then someone next to him only hears "excel," and then someone next to him only hears "sell," and then a guy looking more worried hears "sell," and then everyone clamors to sell. So everyone is selling, and there's the next panel. There's a guy that says, "Man, this is madness. I can't take anymore. Goodbye." The guy next to him hears "goodbye?" question mark, and then someone hears "buy," BYE question mark, and then someone hears "buy" like BUY, and then everyone's clamoring to buy. And that when I mention that markets are manic, that's kind of what I mean. Is that I used to think that markets moved in this real, I don't know, professional, measured, reasoned kind of way. Stock prices went up because the company did something good, and generally that might track to be the case. But when we're talking about crypto markets, where most of the market participants are average retail investors, I mean, these are not financially savvy individuals necessarily. Yes, they're out there, but the market isn't primarily composed of those people. Humans react with fear and greed with things that are important to them: their family, their friends, money. And so anybody who has watched, if you've found yourself watching candlestick charts, 1 minute candles or 5 minute candles or something like that, when you see a downturn like what we actually just saw, I mean, a number of days ago, it looks like the world is ending. Right? Like this red candle just grows and grows and grows. And it's just like, oh God, the ship's sinking. Like I got to get out. Like, I still have some in there. I can salvage that. And this is like kind of the mindset of people who don't have much experience in trading volatile assets, or even, I had a long background playing poker, and the kind of adversarial thinking that I think comes about with a game like that, and almost the need to disassociate the money that you're playing with what constitutes the best decision. When people are moving around something that's important to them, and money is arguably one of the most important things that people have, they do not behave in a measured, rational, calm way. So reflexivity being high in this industry, I think is that way for a couple reasons. One, like I said, most of the participants are retail investors who don't have any training or real experience trading volatile anything. And the second is that, given that all of this stuff is built on the internet, communication about what a market is doing moves at the speed of light. And effectively, crypto trades, especially compared to how long it takes for stock trades to settle and all that, the trading now also moves at the speed of light. So, you have this investor base that is largely inexperienced. The markets that the assets are traded on are illiquid from any kind of global point of view. And so the reflexivity is kind of like when prices move up or down, they do so at just a killer pace. Um, and I think that is maybe one of the least, what's the word? One of the least acknowledged aspects to crypto is how reflexive it can be. And all it takes, you can just go back through the history and look um, at how long it took some, the big blow off kind of peaks, like where the rally really started to just go vertical. Most of the money is made in a very short period of time. And I think that reflexivity will dissipate a little bit more, volatility dissipate a little bit more as the markets become more liquid. But I think we have a ways to go until that starts seeing any appreciable, temperance.
Okay, I'm making this up on the fly, but I'm going to ask you some very quick questions, and you just say whatever comes up first in you. From a retail perspective, you're young. Is it crazy to go all in this space, financially speaking? Just a quick answer.
Ultimately, yes, I think it is irresponsible to go all in.
All right. Does it harm or doesn't it harm to follow crypto Twitter and or crypto Reddit?
Depends on how much you like screaming at computer screens. Overall, I think it does. If you can temper your response and also keep in mind that the way the written word takes form is not in line with the way people are saying it, right? Some things can read much more brash or aggressive than they would have been said by the person. Then I think there's so much knowledge and information on crypto Twitter and the regular crypto channels that I think it'd be, if you have skin in the game in this space, it's sort of irresponsible not to be monitoring those.
It's a net positive.
Yes.
All right. Again, retail perspective. Should one open a CDP? And I mean, should one go long on Ether or Bitcoin or whatever through a CDP? Or maybe even take a long or short position on something like DYDX or something like that?
For trivial amounts, absolutely. I think it showcases what the tech is capable of. And that's, at least in my experience with new people to crypto, that's a big eye-opening thing for them. They have not experienced anything like that before. So yes, I do think it's something that your average retail person should dabble in.
I'm just thinking. I'm thinking about things learned since 2017. Quick questions.
Yeah.
Yeah, I think those were the three major ones that I had in mind. There. Let's just go back to the post. So we covered the reflexivity part. Mm-hmm. You mentioned this. So you wrote a post about a month ago. And just in the last couple of days, I think I was actually traveling. So I was offline for 5 days. And then I came back yesterday and I saw that the market went down with 25 or 30%. So, yeah. And it was funny how it was just, yeah, it went down with 25%. That's okay. I didn't miss any of the drama. But how do you actually, the point I'm trying to make is that there's a difference between even having a written plan, having everything written out and thought out, and then the actual market moves. It's like that. I think it's a Muhammad Ali or probably a Mike Tyson quote, something like, you have a plan and then you get hit or punched in the face. It's something like that.
Yes.
And actually, I like the biblical or the Jewish quote even more. I think it's something like, man makes plans or man plans and God laughs. It was something like that.
Yes.
Something like that. I think it's a little bit more poetic, but I'm butchering the quote. But the point is, there's this, I noticed this in myself, this difference between, or this empty space between actually thinking something true and then the day-to-day action. How do you separate both? Like when we have a 25 or 30% drop and people are shouting that $150, $100 Ether is coming closer. And actually today I saw a post about, if that happens, how many CDPs would be liquidated, adding even more sell pressure. So how do you go about that?
It's a great question. I try to take very long time frames with this stuff. I know that it'll take years for the tech to play out and permeate through society, and the actual manner in which that happens, I, like everybody else, have no clue how it'll actually go. I think I have a mind towards sort of a cone of directions that I think it could possibly go in, and the specific way it will play out is yet to be seen. But I try personally to keep in mind that the price is not the network. Just because the price is high does not mean that the network is necessarily fulfilling its vision, and just because the price is low does not mean that the tech is doomed. So it could just come with the fact that I've been in this for quite a while, but I look at price movements as just markets being markets. And with what I talked about in the post of these markets generally being illiquid and highly reflexive, at this point, double-digit percent price moves don't really concern me too much if I'm taking a long-term point of view. If I'm a day trader or something like that, then yeah, that's a totally different story. But I'm looking at long-term prospects and like value investing, and I look at, okay, the price dropped. Was there some major news? And almost always, yes, there's major news. The major news is great, and the price is just doing its thing. So I see it as sort of like the mark of this still being immature technology.
Is it? So you're in this space. Do you actually recommend friends, family members to get in? And I was going to ask, is it unethical not to tell them to get in?
See, oh man, I love that you added that on the end. I'm really torn on this, and I mean, still to this day, I'm torn on this. On the one hand, like I said at the end of the post, that like I really do believe that crypto is effectively a gift to this generation. Like the asymmetry of this bet that we're talking about here is staggering. So on the one hand, yeah, I do feel like, man, it does feel almost irresponsible not to tell people you care about that this has just incredible potential, and the returns could and kind of have dwarfed like anything else. On the other hand, I think living and breathing this stuff, no question puts you into an echo chamber. And I think risks get downplayed. And the fact that, certain things haven't happened, people take as evidence that they won't. And I think that's misguided. So I think that there are definitely risks here. I mean, and like large risks. At the same time, again, with long-term, with a long-term point of view, I obviously am in the position I'm in, so I've come to the conclusion that the risks, or that the rewards far outweigh the risks. But I personally generally try not to tread on in the ground of advising friends and family members to buy this, right? I mean, I have some understanding of where those people are financially, but I think that it's absolutely responsible to say, I think of the investable money that you have, aka money that you could, live on without, not your rent money, not your bills, not your anything, investable money. Yeah, I think that it for sure could be argued that it's responsible to have a position in crypto, just as part of your high risk allocation in a diversified portfolio. But I don't know. I try not to broach this topic too much. If people ask me my opinion, I'll tell them my opinion, but I am not the guy that's going out there saying like, "Oh man, you should buy this stuff. The returns are crazy."
Yeah, I've always liked this, and this is what because I would say my position is similar. I don't go out and tell people they should do X or Y in general. I'm not even talking about investing, but just in general.
Yeah.
But if they do ask it, I still think that the advice to spend like maybe 1 to 5% of your either your monthly salary or your net worth, whatever that might be. Which if you're talking about a salary is like a restaurant visit, maybe 2, maybe 3. Yeah. It's money you can miss, but in the off chance that within 10, 20 years, your average career, or let's say 30 years, depending on where you're at, you could just outperform a market, just and not even from a technological perspective, but you could do so well especially because you have that long-term perspective.
Yeah, and because the potential for returns is so outlandish. It really highlights what I meant by the asymmetry of the bet, in the sense that like your risk here is not a lot if you're talking about allocating, like you said, 1 to 5% or something like that. But if it does work out, it could occupy a huge portion of the total gains that you see from all investments, period, that you have, in 401ks or in, your E-Trade account, or however people are investing. It's a little risk for a potentially huge reward. And even if the likelihood of success is, say, 1%, if you're getting strong enough payout odds, it makes total sense to put money into it. Just because the math works out that way.
Yeah, I think I forget to write the exact term, but there's this way of calculating risk divided by possible rewards. It's where you either divide the probability of something happening by the chance or by the possible gains. It's something like that. Like if it goes up, if you have the potential to have something go up 100 times or 100x, and the probability is 5%. There's some way of calculating it, but somebody listening to this will know, but I forgot. Mm-hmm. So just looking to the future, you've been here for a while. I don't care about price predictions, but I do care about how you think about keeping a sane mind in this market. And you said that we talked about the reflexivity, but that's easier to look. It's easier to, in hindsight, to notice or to think about what happened in 2017-18. How do you even think about that going forward? How do you have specific markers? Are there things you're looking at, like the Bitcoin halving or the stock to flow model that has come up recently or in the last couple of months within the Bitcoin community? Are you looking at inflation within Ethereum, the testnets going live? How do you think? What is your, let's say for anybody who came in, or for anyone who just made some money or who came in after the peak and who has been through 18, 19, how do you think about this space going forward from an investment perspective?
Yeah, I think that at least right now, there is so much happening within Ethereum that I find it dominating most of my research time. I think that Bitcoin has sort of found its narrative in digital gold. And I have my own questions, I guess, as to whether that narrative is good in perpetuity. I think it's for sure good for, say, the next, 5 years. But I'm in that camp of not being sure how Bitcoin is going to sustain itself once block rewards go away, other than number go up. So most of what I see is as interesting from an investment standpoint, moving forward, and especially on a risk adjusted basis, is within Ethereum. I I think that DeFi, decentralized finance, open finance, that whole movement is super exciting to me. I thought ICOs and token sales and stuff like that were exciting as well. It sort of democratized, the ability to raise capital. But as we saw with most ICOs, the SEC came and kind of poo-pooed on that. But I actually think that the what I'm seeing with DeFi, open finance, is actually more exciting than ICOs. So that, like, coupled with Ethereum's major move to proof of stake, ideally, hopefully, Q1 of next year. I think. Oh, and also having things like EIP 1559 get implemented.
Wait, is
Jared
that
Connors?
yeah? Is that Eric's one?
Yeah, that's right.
The ETH for gas fees, burning ETH for gas fees.
Yes. I was actually surprised to see that being considered for the next fork, and it seemed to be a fairly large change to the dynamic. So I'm not surprised to see that it's been pushed out to a later date. But I think that if that is sound and gets implemented, that has huge driving force behind the ETH is money movement. Let's see what else.
By the way, just to highlight one of the things you said, just the other day, it might have been yesterday, I think it was an NBA player, I'm not sure, an American who actually tokenized his contract. And I think it's Ryan Sean Adams who always talks about, or who often talks about, whatever can be tokenized will be tokenized. But it's a great example of a few things, actually: the technology catching on, but also the legal framework catching on. And because basically, if you're buying this contract or this bond or whatever you want to refer it to, you're not just taking the risk of getting paid, you're also taking the systemic technical risk. Like, you're not, well, from a legal perspective. So actually seeing these things develop, it's just fascinating to see for me. It's like, oh, wait a moment, these people they're taking a gamble, but they are, I assume they are educated enough, and they did their research, and now they decide to launch this on Ethereum, which means that they necessarily have to take a 3, 4, 5 year perspective, whatever the contract period was. But to launch these things on Ethereum, or to tokenize these things first and foremost, and then to use Ethereum as a base layer or the smart contract platform, it's just it just under or highlights what you've been saying.
Yeah, and I completely agree with Ryan that the way it looks right now, anything of value and things that we don't even really know to value yet will be tokenized to some degree. And right now, it's like there like isn't a competitor. I mean, there's stuff that's going to launch. It's in testnet phase. Has a lot of promise. But being a live chain with actual paying smart contract usage is, where it's actually in adversarial conditions, is a whole nother animal. In fact, I kind of wish there were a more solidified number two in the smart contracting space. I mean, the ones that are there are delegated proof of stake, and some people call them cartel chains. And I would love to see a second truly open smart contracting platform. But right now, if the thesis is that everything of value will be tokenized, then right now the only platform, as far as I can see it, to do that on is Ethereum. And I look at things like what the Brave browser is doing with tokenizing attention. I mean, that's pretty sci-fi. That's regardless of the token models themselves, I think that just like the conversations that are happening and the amount of investment that big name players are putting into developing this stuff and exploring novel use cases, it's so bullish in my opinion.
So proven track record, very bullish adoption. It's a gift to this generation. The only trustless token within Ethereum is Ether. So you are saying go all in.
This is not financial advice.
No, it was just. Sorry,
yeah.
I'm rambling. It was funny to hear you describe those things and then not connect both. But
sure, yeah, I know what you mean, and I'll hold those two in tension.
Let me have a look. I don't know. I have the feeling that we could talk for hours because I feel like we've only scratched the surface. Maybe we should do that sometime in the future. But let me just ask you: is there anything we didn't cover, or which you would just highlight a little bit more? Is there something you would like to share or say? Whatever comes to mind.
Let's see. I had a couple things written down, but I think we kind of touched on.
It would have been.
Most of them.
It would have been funny if you would say. You completely we completely skipped the list of things I prepared.
Yeah, right. No, I think we touched on most of it. I guess one thing that I've been trying to focus on a little bit more in talking with new people about Ethereum and crypto broadly is trying to convey how architecturally different products and services built on these types of platforms are from traditional ones. In the sense that, the closest parallel that I feel like I can kind of come up with is that it is one of radio, in the sense that, a person needs to make like a one-time hardware purchase of like a radio receiver. And then that one-time purchase gets them access to radio sort of anywhere at any time. They don't have to pay an ongoing fee for it. They don't have to sign up through a radio provider. It's floating around the air all around. And so I've tried to and failed in doing so. I'm still trying to kind of refine how to put this, but trying to convey to people that the future of tech products and services could, from a fundamental standpoint, be kind of looked at the same way, with the parallel being in the radio, you buy a radio receiver, but in the crypto world, you have a computer or a smartphone, and those are only getting more commoditized. I think even there are more cell phones than people. So most people, even in developing areas, have a mobile device. So I try and highlight that, especially in the context of looking at big tech overreach. The experiments that central banks are taking around the world. And I found some, that I think that kind of gets at what is unique about crypto or Ethereum is this sort of, you never don't have access to this as long as you have an internet connection. There's no one, no one's taking it from you. No one can keep you from participating. That's I think one of the only things that I wanted to touch on.
It reminds me of that 100% uptime thing. I don't know. I don't know who's been floating this idea, but I think I read a tweet where somebody said Bitcoin and Ethereum. I'm not pretty sure. I'm not really sure, but he said something like, I think it was that guy from Santander, the head of digital, who launched the Ethereum bond, the $20 million or euro Ethereum bond. And I think he alluded to, I think it was it was his Twitter profile where he wrote or answered or replied to someone stating that there's actually been 100% uptime. And the reason why this comes to mind, I think, is because just that simple fact in a software-based world is just phenomenal in and of itself. So, and I think it came to mind because you have this network or this thing that is constantly online, which is easily accessible, like the radio example or metaphor analogy I think you used. So it just came to mind. But I think it was that Santander guy, the head of digital there.
Yeah, and that type of, that's one of the plus sides of having decentralized architecture. The downside being that kind of at least currently your network capacity is sort of limited by the capacity of one node. But on the flip side, you effectively have zero downtime or like risk of such.
Brad, when can we expect your next post?
I don't know. I would say like I have definitely on Twitter and to some extent on Reddit. I find I read way more than I contribute. But I'd like to start flipping that around a little bit more and contributing more. So I don't know, I'll try and probably post something, every month or 6 weeks or something like that.
Will you celebrate when we hit the easy peasy line again, the $324?
Oh, absolutely. That's a classic right there.
All right, let's just wrap up here. I really enjoyed talking to you. As we did last week, I felt bad for not having recorded that conversation. But it was really nice talking to you. I look forward to seeing you or seeing your contributions. Just one thing that just comes to mind. I don't think I have mentioned your username at the beginning, so it's Naviers_stoked. Is that right?
Yeah, that's right.
All right. So for anyone who's actually who missed that, I actually forgot. So check user Naviers_stoked if they want to have a look at your post history or comment history. But I'll link to everything in the so-called show notes or in the post that I will make here, and I'll also link to your original post so that people can check it, including the cartoon. That was everything from my side. Thank you. Yeah. I really enjoyed this conversation.
Yeah, thanks. So did I. Thanks for having me.
Well, you're welcome. So, let's just wrap up here. Thank you very much. And cool. I wish you a pleasant day. I guess if it's right, you're in the West Coast, right?
Yeah.
You're in the West Coast time zone. So have a wonderful day. I'll say I'm about to go to bed.
Okay. Yeah. Have a good night.
All right. Thank you very much, Brad.
Yeah. Thanks, Kobe.